Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Let's see if we can't help you identify explosive stocks under $10. Screening-wise, that is, with our top stock screener, Kevin Matras, who's going to explain it all for us right now. So, people really do like stocks under $10, don't they? It's like some kind of a reference point for them that helps them feel they're getting a bargain, maybe.
Yeah, probably. You know, whether they are is another story, but people do seem to like cheap stocks. For this screen, though, this is kind of a departure for me because generally I like to look for stocks that are trading over $10. But I will at times look for stocks under 10. I am doing that right now. So I figured why not talk about this in today's Screen of the Week.
All right, so you break this down three different ways from what I can tell.
Right.
And the first one is penny stocks.
Penny stocks, right. Yeah, $1 seems to be a common threshold when people are screening for stocks. You know, a lot of people like to actively preclude penny stocks from coming through their screen, oftentimes because of the speculative nature or the wide bid-ask spreads or just the volatility, sometimes extreme volatility, that is all too common with $1 stocks. But of course, not all $1 stocks are bad. I mean, some of these $1 stocks turn out spectacularly, and that's probably why so many investors, you know, stay so interested in these kinds of cheap stocks. But also, too, I think one of the things that gets people interested in these stocks is seeing a stock or imagining a stock doubling or tripling, right? A 1 or a 200% return from a 50-cent base seems easier to do than seeing a stock double or triple from a $50 base or a $100 base or something like that. I mean, imagining Google at $900 doubling, you need I mean, that's a pretty big move. But percentage-wise, it's the same. But that's, I think, why people keep on coming back to these cheap stocks. In theory, it seems easier to see a big move.
All right, well, next you have a group called stocks under $5.
Right. Yeah, $5, that is another common threshold. And I believe $5 is pretty common because a lot of institutional investors won't even consider a stock if it's trading under $5. And since institutions, those are the ones who can generally really move a stock. I mean, 70% of all of the trading volume is done by institutional investors. Since they're the ones who can really move a stock, having those stocks available to an institutional investor can be a bonus, assuming you've picked a good stock. But again, $5 does put that stock into a better category. Just because it's over 5 doesn't mean it's fantastic, but it's in general in a slightly better category than a stock that is under $1.
And then that brings us back to just the broader group of simply stocks under $10.
Right. You know, the stocks under $10, that of course encompasses the first two groups with a little bit more headroom. My typical threshold when I'm screening for stocks is $10. Plus, too, with over 10,000 stocks out there, by putting in a minimum of $10, I can quickly call down thousands of stocks from consideration with simply one click of a button. But again, you know, under $10 stocks, you know, that includes 1s and 5s. You can question their quality, but there's plenty of fantastic stocks that are trading under $10. I can think of several sub-$10 stocks that I had gotten into in the past that have worked out spectacularly. I don't know if that's because I use $10 stocks so sparingly, or if I'm just ultra picky when it comes to buying stocks. But one that comes to mind, I just looked at it today. I remember getting into Lionsgate early last year when it was trading under $10. Today it's trading at 37. I've got that in my trading account. I have it in my IRA. That stock is up close to 300%. So you can find a lot of good gems, but you really have to spend time to find the really good quality ones. And that's what we're going to look at in just a second.
All right, well, set it up for us.
Yeah, so here's the screen that I am running for myself, and these are some good things to use for these cheap stocks, all right? First one, of course, is price under $10. That's going to ensure you get stocks under 10 bucks. How novel. The next one is average dollar volume, and I want that to be greater than or equals to $1 million. So what this is doing is it's price times volume, and this is showing you how much money is trading in and out of this stock on a daily basis. So it's difficult sometimes to trade these low price stocks, but if there's enough money flowing through it, it's going to be easier to be able to get in and out. Okay. Then too, I want the weekly volume to be greater than the previous week's volume. I'll even go for the previous week's volume being greater than the volume prior to that. Any one of those combinations, in my opinion, will work out good. What I'm trying to do with that increase in volume is I want to see interest. I want to see that there is something happening where you see accumulation from a large group of investors. Usually that will show up in that volume read. Okay. Next, I want the Zacks rank to be less than or equals to 3. Simply put, you know, if it's good enough for the Zacks rank, that gives me a good deal of confidence. All I'm really trying to do there is I just simply want to exclude sells and strong sells, so no 4s or 5s. I want the average broker rating to be less than or equals to 3.5, so I want, you know, the brokers on board to a degree. Once again, you know, their ratings are always skewed to the bullish side, so I'm just kicking out anything that has a negative rating from the brokers. I want the number of analysts in the rating to be greater than or equals to 2, so I don't want to rely on just one guy out there who just decided to jump on this stock and listen to what he's saying. Give me 2 or give me more than 2 people so I can kind of take a look at the variance of what they're saying. Then I want the percent change in F1 EPS revisions over the last 12 weeks to be greater than or equals to 0. So preferably, ideally, I want to be able to see the earnings estimates going up, but at the very least, I just don't want to see them going down, and that is what that item allows me to do.
All right, and so, as we always ask, what came through the screen?
Yeah, I ran the screen last night, and there were 72 companies that came through. Here are 5 of them that I had a chance to look at that I think look pretty exciting. And they all come from different industries. Okay. ACLS Technologies, Affymetrix, Navios, that's a shipper, Sonus Networks, and TriQuint, there's a semiconductor. A lot of great stocks here. You know, I can't remember exactly what each price point was on these. I believe one of the stocks was as low as like $2. Some of the other ones were closer to that $9, $10 threshold. But if you're looking for something cheap that does have exciting potential, potentially explosive potential, these are 5 stocks to look at. But I would say run the entire screen. Take a look at all of the companies that came through. Take a look at what industries you see lots of clustering in, and this will give you a lot of great picks to consider.
Own any?
No, not yet.
All right. If you are not at Zacks.com and you're watching this video out in syndication land and you want to see a written version of this week's screen, get on over to Zacks.com. You can access it right off the homepage. And if you want to know more about the Research Wizard, the tool that Kevin uses to achieve all of these screens, Zacks.com/researchwizard is where you should visit on the internet. See, I said it right this time. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.